That was George Affairs report. Meantime, the Alliance of CSOs working on extractives, anti-corruption and good governance has disclosed that investors' appetite for Ghana's petroleum sector has waned significantly since the last petroleum agreement was awarded to Exxonmobil. Now, according to the group, between 2009 and 2023, the Ministry of Energy and the Petroleum Commission attended 21 conferences and roadshows in America, Europe and Asia for the purpose of attracting investors. However, there hasn't been any positive result from these conferences and roadshows. Here's Chairman of the CSOs, Dr. Steve Manteau, addressing journalists.
Investors' appetite for Ghana's petroleum industry has waned significantly since the last petroleum agreement was awarded to Exxonmobil, who eventually exited for undisclosed reasons. While the government failed to negotiate and conclude negotiations on the blocks won through the open competitive bid round, it embarked on roadshows to attract investments. Between 2009 and 2023, the Ministry and the Petroleum Commission attended 21 conferences and roadshows in America, Europe, and Asia for the purpose of attracting investors. However, there doesn't seem to have been any positive results from these conferences and roadshows. We recommend that government should review its investment attraction strategy, as the current strategy is not delivering the desired results.
Well, joining us on Zoom is energy strategist Dr. Yusuf Sulemana. Good afternoon to you. Your reaction to the concerns raised by the CSOs about the declining investor appetite for Ghana's upstream sector?
Yeah, thank you very much, Darrell. Good afternoon to you, and good afternoon to your cherished viewers in Ghana and across the globe. Thank you for having me. Yes, that is interesting, and that's the fact that I've actually painted. But as to whether the details or the veracity of what they are putting out, whether investor confidence has actually waned, is something that is a bit debatable, of course. But from where I sit, I look at it from two perspectives. One would be the fact that, generally investment into the world of hydrocarbon has gone down drastically. And that's a fact because there's a competition between the investment into the world of hydrocarbon and that of the investment into a world of renewables. And so most investors or most banks at this moment in the Western world, they have been cautioned, to strategically, not to invest or not to put so much investment into the world of hydrocarbon. Now, also with what the CSOs are saying, yes, they could also have a point. Because these foreign investors, as a matter of fact, Darrell, if your transparency regime is not that good, they can shun away. So yes, transparency is one of the issues that potentially can take investors away, especially if your regime is not that, very, there's no clarity in terms of your regime or whatever. Or when the investors are coming, they have to go through a lot of bottlenecks in terms of who they are going to see. Or there's no straight route with this kind of investment. Yes, so transparency for sure could be a contributing factor to investor confidence waning. But overall, what I would say is that generally, I think investment to the world of hydrocarbon has gone down, and so we have to re-strategize. Now, if you look at the quantum that has come so far, have we judicial?
All right.
I think we haven't, and we could do better.
Okay, so two things. How much has this got to do with the exit of Exxonmobil and the issues that surrounded their exit? And you talk about re-strategizing. You mentioned the fact that there's an energy transition going on. We're turning to fossil fuels now. What can we do to reverse this? All right, Dr. Yusuf Sulemana, frozen there, but I want to bring in, if we have him, Yaolate, who is, okay, I understand Dr. Sulemana is back, so if you can hear me, I was just asking your thoughts about what we can do as a strategy to reverse this declining interest, if you like, and also brought up the fact about energy transition, just like you mentioned, more attention on renewables. Maybe we should also be investing as much in that.
Yeah, so yes, diversification, of course, is a way to go. But at this moment in time, I think what we need to do, we still have a quantum of hydrocarbon reserve that we can take advantage of. A quantum of hydrocarbon reserve that we can take advantage of. Hello?
Okay, you're breaking a bit. Let's try this next question to see if we can get to hear you clearly. We are getting indication the country has so far secured $9 billion from crude oil exports. I'm just wondering, could it have been more since 2011?
Yeah, so yes, there could have been more, especially if you have strategized to increase, our shares. This $9 billion is just coming out of the very meager shares that we have. At the end of the day, the shares that we have as a nation from these three oil fields is not that much, and yet we can get this $9 billion out of it. And so, if you have strategized in terms of this agreement that we're doing at the end of, let's say, from the beginning stages, to get more shares in this field, I think this money could have been doubled or even quadrupled. But all boils down to the fact that how much do we have to bring in place? There are two things in upstream investment that will keep you competitive. Number one, you need to have the financial model, and number two, you need to have the wherewithal in terms of technology. Technology, for you to say, I don't think it's a big issue. Once you have the finances, you can still buy the technology. But the finances that we are talking about here is the fact that whatever we need to push back into the wells or into our investment portfolio to be able to churn that well, we haven't done that, and we haven't been deliberate about that. So yes, energy transition is coming, but I believe we need to be deliberate. We concentrate on the core business, that is exploration and production. This is simply because if we don't become self-reliant, at this moment in time, that investment is dwindling, then it will come to a time that if players are not ready to put in like what is happening now, then we're going to find ourselves wanting. Right now, ask yourself this kind of, in the upstream industry, those who have ENI, Talo, and then the rest, assuming, God forbid, they should exit, I think Ghana upstream is going to collapse in a way. However, we don't hope that to happen. So how do we prepare ourselves to endanger that? To be able to take care of that should it happen at any point in time. Even if it doesn't happen, I can't fathom why GMPC has been existing for all these years, and even with this amount that we have received, we can't boast even a single well that we drill to our credit that we can extract oil in commercial quantities. That is not acceptable. So yes, we have to be deliberate in the investment. We can't spend so much on, let's say, corporate social responsibility to the detriment of the core business. That cannot be. So these are the strategies. We have to be deliberate in the investment. The technical know-how, we can always get it. Yes.
Want to bring in Yao Latte, who is partner at Deloitte Ghana, for some more thoughts. And usually when it comes to our oil revenue, the questions raised, Yao, is as to whether we have properly managed the monies accrued so far. Your thoughts?
Yes, so I hope I put the order there. Hello. Yeah, so I think if you look at you listen to the report that was read, you will notice that we've used our oil revenue significant, about 40%, to support our budget over the years. And for those that you say best practice, the UAE, United Arab Emirates, the Saudi Arabia, they use their oil revenue to support specific projects that support or enhance their development. We have used for budgetary support, and some of them go into consumption and things that are not long term. And let me tell you two things that happened when we were hit with COVID. First, we lowered the cap on the Ghana Stabilization Fund from 300 million to 100 million. So we could transfer the excess to support our COVID alleviation program. Secondly, we also amended the Petroleum Revenue Act so we could withdraw from the Heritage Fund. If you look at these three things that we've done over the last few years, using the money to support budget, reducing the carbon stabilization fund to support our COVID alleviation activity and also transfer it from the heritage fund, you realize that really we've not allowed our oil revenue to be utilized in a manner that will help in our long-term development. So I guess we can go on to what the best practices or what we can do going forward.
Exactly.
And as has been rightly mentioned, diversification is the way to go in the era of energy transition. Oil resources have not got infinite. They will not be there forever. They will deplete. They are not renewable. And so if you know this, you realize that in UAE, for instance, they've moved into tourism. So they are not only relying on oil resources. They are diversifying and doing other things that will generate revenue over and above their oil revenue. Secondly, they have engaged the advisors or independent sovereign wealth managers. So our Heritage Fund and others who are those that we engage are the independent sovereign wealth managers, so that even when you are hit with COVID, you don't touch that sovereign wealth. It is managed independently by a body who recommend how to utilize it and where to invest. And then thirdly, we should also invest in strategic infrastructure. Inland port, for instance, support rail transport within. Our roads get destroyed year on year because we are using the trucks on our. But have you considered inland port where we support industry? So I think all of these are some suggestions that we should also utilize, focus on going forward. Otherwise, we'll be using our oil revenue for budgetary support, for consumption, and things that will not help us in the long term.
I'm just going to also ask you about the concerns raised about the declining interest in the upstream sector from the investor perspective and what this means for our economy going forward.
Yeah, so I think there are several factors accounting for that. One of them being our macroeconomic environment, which of course, obviously we are having challenges. Secondly is the significant interest in other resources outside Africa. So some of them have exited not only the Ghana market, but the African market. So it is not out of place to say that they are exiting Ghana. It's just investor decision. They are moving to Guyana and other places where they find it a lot more investor friendly and they are getting a lot of benefits. So what we need to do is to also look at our petroleum regime. What are we giving to the investors to encourage them or to motivate them to invest in our markets?
Okay, one more question before you go. In terms of returns from oil savings, we have a little over $1 billion. Is that good enough?
I think, like we discussed before, we could have done, and one of the ways to do more is to increase your participating interest in oil resources. Sovereign or countries that have benefited from oil resources have significant stake in their oil investment. So where you have 15 or 10% participating interest, it's wholly insignificant. And so in periods when oil price went up, we did not get much benefit because your interest is about 15% or 10%. So if we have, and I think that's why GNPC, for instance, is looking at investing in oil sector. And I think the good idea, what we need to do is, are we investing in blocks that have got prospect, or we are just investing for the sake of it? We should be investing in blocks that have got significant prospect so that we get returns in the future.
All right. Yaolate, thank you so much for speaking with us. Partner at Deloitte Ghana, appreciate your time. Well, let's